Canada is taking a big step to fight climate change. The government has announced a bold initiative that aims to significantly reduce the nation's carbon footprint. It plans to put a limit on how much carbon dioxide its oil and gas industry can release. This move targets one of the largest sources of greenhouse gas emissions in the country. This emissions cap is a critical part of Canada's plan to be carbon neutral by 2050. Renewable energy sources like wind and solar are expected to play a significant role in this transition. The goal is to reduce the country's impact on the planet's climate. Melting glaciers and endangered wildlife are stark reminders of the urgent need for action. This decision reflects a growing global awareness of the need to address climate change. People around the world are demanding stronger measures to protect the environment. Canada, a major oil producer, is taking responsibility for its environmental footprint. The country is investing in cleaner technologies and environmental cleanup efforts. But this action has sparked debate about its economic consequences, particularly for its close trading partner, the United States. The balance between environmental responsibility and economic stability remains a contentious issue. The United States relies heavily on Canada for oil. This partnership is a cornerstone of North American energy security. In fact, Canada is the largest single source of crude oil imports to the US, providing a steady and reliable supply. This oil is crucial for American refineries, especially those in the Midwest and Gulf Coast, where refining capacity is significant. They depend on Canadian crude to produce gasoline, diesel, and other essential fuels that power our daily lives and industries. The close energy relationship between Canada and the US has benefited both countries, fostering economic growth and energy stability. It has ensured a stable and affordable energy supply for the US, helping to keep energy prices in check for consumers and businesses alike. For Canada, it has meant a reliable market for its oil exports, contributing significantly to its economy and supporting thousands of jobs. Canada's emissions cap could have significant economic impacts. It could increase the cost of producing oil in Canada. This means American refineries might have to pay more for Canadian crude. Those higher costs could then be passed on to consumers at the gas pump. Some experts worry that the emissions cap could discourage investment in Canada's oil sands. This could lead to less production and higher prices in the long run. The potential economic ripples extend beyond the energy sector, impacting consumers and overall economic growth. Canada's emissions cap raises a complex question: how to balance important environmental goals with economic realities. Reducing carbon emissions is crucial to combating climate change, but these actions often come with economic costs. Finding the right balance is a challenge. Governments and industries must carefully consider the trade-offs. The decisions made today will have lasting consequences for both the environment and the economy. Green technologies offer a potential solution to this dilemma. Renewable energy sources, carbon capture, and other innovations could help reduce emissions while supporting economic growth. But these technologies are still developing and can be expensive to implement. Investment in research and development is crucial to accelerate the adoption of green technologies. Governments and private companies have a shared responsibility to foster innovation and create a more sustainable future. Canada's emissions cap has sparked mixed reactions from various sectors of society. Environmental groups have applauded the move, calling it a necessary step to address climate change. They believe it will significantly reduce greenhouse gas emissions and set a precedent for other countries to follow. The oil and gas industry, however, has expressed concerns about the potential economic impacts. Industry leaders argue that the cap could stifle growth, increase operational costs, and lead to a decline in investment. They argue that the cap could harm competitiveness and lead to job losses. Politicians are also divided on the issue, with some fearing the economic repercussions. Some support the emissions cap as a bold climate action, seeing it as a necessary measure to combat global warming and protect future generations. Others worry about its potential to harm the economy, arguing that it could lead to higher energy prices and reduced economic growth. This issue highlights the complex interplay of environmental, economic, and political factors in shaping energy policy. It underscores the challenge of balancing ecological responsibility with economic stability and political feasibility. What are your thoughts on balancing environmental responsibility with economic considerations? How can we encourage the development and widespread adoption of green technologies? Share your views in the comments below.